Hello everyone, this is Dr. Good Vibe from OmegaSupreme.com, and this is October the 1st, 2010. I'm sorry that I wasn't able to put up a video yesterday. I didn't have an opportunity. I did, however, close some trades, and I'll get to my trading for my account shortly. So let's get started. Today, Friday, ISM news, ISM manufacturing came out of the U.S. and it was positive. It was slightly positive. However, the U.S. Economy really just kind of is slowly growing. It's growing. That's the best. That's the positive news. The negative is that it's not growing by leaps and bounds. So again, really, we're still looking at either dollar negative or dollar neutral currency forecast, and we can even see that in the S&P 500 today. If we look at it, really today's S&P 500, there really wasn't much going on, and it still didn't close well above this resistance point right here at 1151 or 1150. We haven't seen a solid day where the S&P 500 closes above that. So still being a really good resistance point right here. We're seeing volatility declining, as well as volatility declining on the CCI index. So we're looking at some ranging, and basically I think that traders out there, investors, hedge funds, are looking for some very, very massively positive news for the dollar, for it to really, for them to kind of push back into the equities markets, and by dollar I meant the US markets. So they want positive news, they want lots of hiring, low unemployment, so that they can start pumping money back into the equities markets. Let's check out the Euro USD today. Wrong chart. Euro USD. And again, because the ISM manufacturing was really not that fantastic, everybody kind of just punched back into the euro, and we saw a huge gain in the euro today, closing at $1.75.9. I bet you money, in all honesty, that we're going to see the euro reach its highs that it was at around the financial crisis. When the financial crisis started a year or 2 years ago, we're probably going to see highs get up to, at the very least, around here to 1.40 pretty quickly, and then maybe settle around 1.43, 1.45, settle around there for a while longer. So my personal belief is that we're going to see some increase in the euro. We're seeing a quick decline in the volatility, while in the last 2 days we're seeing a huge increase. The volatility of CCI is declining, and we're seeing a huge trend here, so that you just can't avoid that. I would not short the euro at this point. However, I'm not trading it, but it's a good indication of what to look at. Let's move on to the things that I look at. My USD HUF trades have been doing very well. I am now up 863 pips on average. That actually means that on my average trades I'm doing extremely well. I have currently this trade still ongoing. That is up 2,064 pips right now, where I sold at around 22,249, and I'm still holding that. And that's up about 2,000 pips. The last two trades that I've made here and here, up 153 pips, and I did close out 153 pips rather, and 374. So doing very well. All three trades are still open. I have been closing, selling and closing, selling and closing all the way down. My personal belief, if you've been watching the other previous videos, is that I think it's going to continue declining up until around here. Probably Monday or Tuesday. Wow, we did break that level here. I will start to maybe close some positions out around here. Things should start to range at around 196. So 196.36 around here, 196.07. I think that may be a fair value for the USD/HUF for now, unless there's more negative news coming out of the US, and then therefore I would actually expect it to even go a little bit lower. So probably Monday, Tuesday, I will look to probably close some positions that I've had open for a long time. In the last essentially 3 weeks, I've had this position open, and have been closing and opening positions ever since. I may close over half my positions once we get down here. I don't want to sit in a ranging market for too long, because you never know what will happen. So USD/HUF still negative. I'm looking for a depreciating US dollar across the board against the HUF. Next up, the Aussie dollar. Where is the Aussie dollar here? The Aussie dollar, sorry about that. The Aussie dollar is doing extremely well as well. I did close out a position 2 days ago, and now that I look back on it, it may not have been the smartest of moves, as the Aussie has still continued to go upward. I am still up roughly 347 pips on average. I still have my original position here open. I still am very Aussie dollar bullish, and I think that it will appreciate in value quite a lot more. I may, in fact, I should probably set up a buy order around here about 0.965, just in case price drops to that level and hits it and continues further. I am looking to possibly get into this again. All signs look for it to be bullish. Fundamentals are fairly bullish in regards to the Aussie dollar, and so are the technicals. The Ishimoku is continuing up. Price is not closed below the Tenkan-san here. We are seeing a bullish cloud. The CCI is still up and looking for an upward movement. So still very bullish on the Aussie dollar. Still going to hold on to my long-term trades. Still up about 347 pips here, and doing extremely well and capturing that high yield that the Aussie pays. So we're still getting paid interest every single day. We're getting paid that swap every day. So I like that. I like trading that, and therefore we're going to hold on to those trades. USD Turkish Lira, I'm so happy I held on to this trade for a good solid 8 days before it started to trend its way down. I sold this at this point 1.489 on the Turkish Lira, and just sat on it for a good solid week. And at that same time, I was capturing the yield. I was getting the swap rate for those 7, 8 days before it started to trend downward. Of course, my position was sized so that even if it went about 100 pips against me, really it had basically 2%, 3% impact on my account. So I didn't even have a major drawdown. And yet at the same time, I had the Aussie dollar position open and the USD Hungarian forint position open as well, and those positions both went positive. So I don't think I even in the account had ever gone negative ever since the beginning of the trading that I've done in this fashion. So anyway, we're still seeing very, very positive results. I did close a portion of this trade. I think I closed this trade here at this point 1.45. I did want to take some profits. It's always good to take some profits. There's nothing wrong with that. But I still am up an average of 339 pips on this. And this is a very high yielding currency as well. So I could potentially hold on to this forever. I did close some of that position because I did say that once the Turkish lira does reach this point in the previous videos of the last couple of days, I will close out some positions. It's gotten basically down to where it was a year ago at the low, and so I don't want to hold any positions for an extended period of time past here. I may actually look to close another position, another half position around here somewhere, and take my profits and run for it. There's nothing wrong with that. It's playing nicely conservative. and I like playing conservative, especially when these markets are quite insane at the moment and very volatile, and really you're basically going day by day. Now today's results are very good. So these are some results I've shown in the last couple of days for previous September 28th and 29th. As of the 1st of October, today, the realized profits are 7.04%, and the net asset value, that's realized profits plus unrealized profits, we're up to 22.63%. We're doing extremely well, as opposed to the S&P 500, that's only up 2.95%, and the Toronto Stock Exchange, which is up 1.82%. As of the beginning of this account, when I started trading this fashion on the 13th of September 2010. So in roughly about, I'd say about 15 trading days, we've done exceptionally well on this account. We're up 7% on the actual account, and up 22% if we closed all of the positions now. And I won't be doing that anytime soon, because I plan on scaling in. Even if the account goes down, even if the net asset value goes down, I plan on scaling back in again, as I'm trading for yield, not necessarily capital gain. So my goal in the long run is to be able to achieve about 30 to 50% return in 1 year of realized gains. Although it's sexy to have a return of 100% or more, you know what, gains like that basically require you to take very, very outsized risks, and I'm certainly not willing to do that, especially not in the currency markets, especially not trading currencies that can move hundreds of pips a day. And so that means that sure, you can get lucky and profit, but to be able to hold on to those gains for an extended period of time, essentially hedge fund style, requires you to be conservative, requires you to be smart, requires you to position your positions properly, or rather size your positions properly, and make sure that you're not risking your entire account on 1 or 2 trades. Also, a note to remember is to make sure that you rebalance your portfolio. All along the way that I've been actually trading this method, I've been rebalancing these 3 currencies. So whenever a currency does really well, or I've traded a larger position and it's done really well, I do scale back down and move into another currency as well. So these are balanced positions. So yeah, sure, I may be up 863 pips on the USD HUF, but the actual dollar value is roughly the same as the AUD USD. And also note that these all have different volatility profiles. Having said that, again, that impacts your position sizing. And we'll talk about position sizing in another video. Anyway, this is Dr. Good Vibe from OmegaSupreme.com with 7.04% realized gains, 22.63% net asset value. Friday, October the 1st, 6:03 p.m. Toronto time, 8:03 a.m. Tokyo time. Thank you. Bye-bye. Have a great weekend.